In 2008, the global financial system was falling apart. Banks were collapsing. Markets were crashing. Millions of people were losing their jobs, their homes, and their savings. Trust in the financial system was disappearing. And then, something strange happened. On October 31st, 2008, an unknown person, or perhaps a group of people, using the name Satoshi Nakamoto, published a document online. It was only 9 pages long. Its title was Bitcoin, a peer-to-peer electronic cash system. At the time, almost nobody cared. There were no Bitcoin billionaires, no Bitcoin ETFs, no giant mining companies, no Wall Street institutions fighting for exposure to it. Bitcoin wasn't even worth $1. But hidden inside those 9 pages was an idea that would eventually grow into one of the most valuable and controversial financial assets in history. This is the complete story of Bitcoin, and it begins during one of the worst financial crises the modern world had ever seen. Chapter 1. The Mystery of Satoshi Nakamoto, 045 to 2. Satoshi Nakamoto wanted to solve a problem. For centuries, transferring money depended on trusted intermediaries, banks, payment companies, governments. If you wanted to send money electronically, someone in the middle had to process and verify that transaction. Bitcoin proposed something radically different. What if two people anywhere in the world could transfer digital value directly to each other? No bank required, no payment company required, and no central authority controlling the network. Instead, thousands of computers would collectively verify transactions through a public record known as the blockchain. On January 3rd, 2009, Satoshi Nakamoto mined the first block of the Bitcoin network. It became known as the Genesis block. Bitcoin was officially alive. But there was a problem. Almost nobody was using it, and Bitcoin had virtually no established market value. For months, it remained an obscure experiment shared among programmers, cryptographers, and early believers. Then something happened that would become one of the most famous purchases in financial history. Chapter 2. The $10,000 Bitcoin pizza, 2 o'clock to 3 o'clock. On May 22, 2010, programmer Laszlo Hanyecz made an unusual offer online. He wanted someone to buy him 2 pizzas. In exchange, he would pay 10,000 Bitcoin. Someone accepted. The pizzas arrived, and 10,000 Bitcoin changed hands. Today, the transaction is remembered every year as Bitcoin Pizza Day. But its importance goes far beyond an expensive meal. For the first time, Bitcoin had demonstrated that this strange digital currency could actually be exchanged for something in the real world. The experiment was becoming money. And what happened next would turn a tiny community of programmers into the beginning of a global financial phenomenon. On October 31st, 2008, Satoshi Nakamoto published a 9-page document called Bitcoin, a peer-to-peer electronic cash system. The idea was revolutionary. Digital money that could be sent directly from one person to another, anywhere in the world, without relying on a bank. At the time, almost nobody imagined how big Bitcoin would eventually become. On January 3rd, 2009, Satoshi Nakamoto mined the first Bitcoin block, known as the Genesis block. For the first time, the Bitcoin network was alive. There were no banks controlling it, no company behind it, and no central authority. But almost nobody knew about Bitcoin. And at the beginning, it had virtually no established market value. Then came one of the most famous moments in Bitcoin history. On May 22, 2010, programmer Laszlo Hanyecz paid 10,000 Bitcoin for 2 pizzas. At the time, the Bitcoin was worth only about $41. Today, those same 10,000 Bitcoin would be worth hundreds of millions of dollars. This moment became known as Bitcoin Pizza Day, and it proved that Bitcoin could actually be used to buy something in the real world. Bitcoin was no longer just an experiment. In 2011, its price reached $1 and then continued climbing. More people began discovering Bitcoin. New exchanges appeared, miners joined the network, and the small community started growing around the world. Then, in 2013, Bitcoin crossed $100 and eventually surged above $1,000. For the first time, the world was beginning to realize that Bitcoin might become something much bigger. By 2017, Bitcoin was ready for its biggest moment yet. For years, it had survived crashes, scandals, criticism, and the collapse of Mt. Gox. But now something was different. Millions of new investors were beginning to discover cryptocurrency. Bitcoin started 2017 trading at around $1,000. Then the price began to accelerate: $2,000, $5,000, $10,000. And by December 2017, Bitcoin was approaching $20,000. The world was watching. Bitcoin was suddenly everywhere. Television networks were discussing it. Newspapers were writing about it. Social media was exploding with stories of ordinary people becoming wealthy from cryptocurrency. People who had ignored Bitcoin for years were now desperately trying to buy it. And Bitcoin was no longer alone. Thousands of new cryptocurrencies and blockchain projects began appearing, raising billions of dollars from investors hoping to discover the next Bitcoin. It felt like a financial revolution, but it was also becoming a speculative mania. People were buying cryptocurrencies they barely understood simply because prices kept going higher. Bitcoin had risen almost 20 times in a single year, and history has repeatedly shown what can happen when prices rise too far, too quickly. The celebration didn't last. In 2018, the cryptocurrency market began to collapse. Bitcoin fell from nearly $20,000 to around $3,000 by the end of the year. Billions of dollars in market value disappeared. Once again, headlines declared Bitcoin dead. Investors who had entered near the top suffered enormous losses. The excitement of 2017 had turned into fear. But Bitcoin wasn't finished, because only a few years later, something would happen that even many of Bitcoin's strongest supporters had never imagined. Some of the world's biggest companies and institutional investors were about to enter the market. But Bitcoin's incredible rise was about to face a major crisis. At the center of the Bitcoin economy was an exchange called Mt. Gox. At its peak, Mt. Gox handled the majority of Bitcoin trading around the world. For many early investors, it was one of the main places to buy, sell, and store Bitcoin. Then, in early 2014, everything began to fall apart. Mt. Gox suddenly stopped Bitcoin withdrawals. Fear spread quickly. Soon after, the exchange suspended trading and filed for bankruptcy. Mt. Gox reported that approximately 850,000 Bitcoin belonging to customers in the company were missing, although around 200,000 Bitcoin were later reported as found. At the time, the missing Bitcoin represented hundreds of millions of dollars. Confidence collapsed. Bitcoin had already fallen dramatically from its previous highs, and the Mt. Gox disaster created even more fear around the young cryptocurrency. Critics declared that Bitcoin was finished. Many people believed that no serious financial system could ever be built around something this volatile and dangerous. But there was an important difference. Mt. Gox had failed. Bitcoin itself had not. The blockchain continued processing transactions. Miners continued securing the network. And around the world, developers continued building. Bitcoin survived. And over the next few years, it would prepare for a comeback that would introduce cryptocurrency to millions of people around the world. Then came 2020. The world was facing a completely different kind of crisis. The COVID-19 pandemic disrupted economies around the globe. Governments and central banks introduced enormous stimulus programs, interest rates fell, and concerns about inflation and the value of traditional currencies began to grow. And suddenly, Bitcoin had a new narrative. Supporters increasingly described it as digital gold, an asset with a limited supply that could potentially protect wealth against currency debasement. But this time, it wasn't only individual investors paying attention. Large companies and professional investors were beginning to enter the market. MicroStrategy began using billions of dollars to accumulate Bitcoin. Payment companies expanded their cryptocurrency services. And then, in February 2021, Tesla announced that it had purchased approximately $1.5 billion worth of Bitcoin. The announcement shocked the financial world. Bitcoin was no longer something that could simply be ignored. The price exploded. Bitcoin broke $20,000, then $30,000, $40,000, $50,000, and eventually more than $60,000. After a major correction in the middle of 2021, Bitcoin came roaring back. In November 2021, it reached an all-time high of nearly $69,000. From an experiment that once had virtually no established market value, Bitcoin had grown into an asset worth more than $1 trillion. Early believers had become millionaires, and in some cases, billionaires. Crypto companies were spending enormous amounts of money on advertising. Celebrities were promoting digital assets. New investors were entering the market every day. For many people, it seemed that cryptocurrency had finally become unstoppable. But underneath the excitement, enormous risks were building. Companies were borrowing aggressively. Crypto platforms were promising extraordinary returns. Billions of dollars were moving through businesses that had never experienced a major financial crisis. And in 2022, the entire industry would be tested. Bitcoin was about to experience one of the darkest years in its history. In 2022, Bitcoin entered one of the darkest periods in its history. The crypto market collapsed, major companies failed, and the dramatic collapse of FTX destroyed billions of dollars in investor wealth. Bitcoin eventually fell to around $16,000. Once again, many people believed Bitcoin was finished, but Bitcoin survived. In 2023, the market began recovering, and something much bigger was happening behind the scenes. Wall Street was coming. In January 2024, the United States approved spot Bitcoin exchange-traded products, giving investors a new regulated way to gain exposure to Bitcoin. Major financial institutions entered the market, bringing billions of dollars and a new level of legitimacy to the cryptocurrency. Then came another major event. In April 2024, Bitcoin experienced its fourth halving, reducing the mining reward from 6.25 Bitcoin to 3.125 Bitcoin per block. Bitcoin's supply was becoming increasingly scarce. The following period brought new record prices and even greater institutional interest. What began in 2009 as an experiment between a small group of programmers had become a global financial asset. Bitcoin had survived crashes, exchange failures, government criticism, scandals, and countless predictions of its death. And yet, the network continued operating. Today, Bitcoin remains one of the most valuable and controversial digital assets in the world. Some believe it could become a global store of value, a form of digital gold for the 21st century. Others believe its volatility, regulation, competition, and technological risks could limit its future. Nobody knows exactly what will happen next, and perhaps that uncertainty is what makes the story of Bitcoin so extraordinary. It began with an anonymous creator, a 9-page document, and an idea for money that didn't require a bank. More than 17 years later, the true identity of Satoshi Nakamoto remains unknown. But the invention left behind continues to operate every day around the world. Bitcoin started as an experiment, then it became an investment, then a global phenomenon, and its story is still being written.